All right. Charting. There's a lot of different charting platforms you can use. There's stock charts. They have charts on FinViz. They have charts on Yahoo Finance. They have charts on investing.com. Uh, you can do charts on some of the brokerages as well. My main charting platform of choice is TradingView. Uh, they just pretty much do charts. They have some integrations you can set up, but for the most part, all in all, they are the best platform to me. In terms of simplicity, that can become complex if you want it to. That's why I don't use TOS because it's complex to me. Uh, so I have the premium TradingView subscription. Good question. I do have the premium one. That's the highest one you can have that lets me do whatever I want. I can go down to any time frame, put like 50 indicators on my chart, like 200 alerts. So, what is charting? What is the purpose of it? Charting and looking at these candlesticks, because there are different types of charts as well. You have line charts of what normally you see, but we look at candlestick charts. Charting is just you looking at the price movement, and you're using the price movement to get a better gauge on the psychology of the market and where people are interacting with this stock at, or the ETF or the fund or whatever it is. So when you're charting, what your goal is, or what your main purpose is to take the information in this distribution of data points, look at it and create a story. Okay, I'm gonna switch into like an analogy real quick, to take it away from trading, because I find a lot of times stuff gets easier to think about when you stop thinking about it like it's trading and just think about regular world stuff. So it's kind of like statistics for a sports team or a sports player, right? If you're looking at somebody's stats, Steph Curry, for example, right, shoots a bunch of threes, all of that. Oh, but I sports bet. Some of y'all sports bet too. And sports betting, there's a psychology piece behind certain games. Certain players, when they were recently traded and they're going against their old team, they play harder. Right? It's like a revenge. Like, y'all just traded me. Give me the ball. Right? Um, when it's a home game, just like you, if you're doing something, if you're competing in something and you're with your fans, your crowd, you don't want to let your people down. You play harder, right? So it's a way of looking at the stats and making those understandings like, okay, this chart we're looking at right now, this is just a random chart that was on my screen, but we see CME around this $207 level is a psychological level. People were selling. As soon as it hit, it had a big kick up. As soon as it hit around this 210, 208 area, people were like, oh yeah, we're taking profits. It came back. What happened? Oh, you're back? We're taking profits. This is the point. I'm taking profits. I'm taking profits. All right. And the same thing when we're down here, it's $200. Now that's when you really have like those very easy to understand psychology levels or psychological levels, those round even numbers. Uh, $200 is my buying point for this stock. I was at 200, I'm buying it. All right. And so just working that way. So you can read that data, you can analyze the stats, and that's where your TA comes in, where you can take it back to sports real quick. If we know that such and such player is at home going against the team he just played for, right, we know that he has incentive to go harder. If you're familiar with football in any sense, a lot of these players on the last couple of days or last couple of games, they have bonuses. You catch a certain number of touchdown passes, you get a bonus, $500,000, $200,000. So hey, he about to be getting the ball because he's trying to bonus. He's trying to turn up. You take that stuff and you look at the stats and you break it down on the chart and you see, okay, when this stock hits this certain level, when this stock is in this certain area, right, there's a certain reaction that happens, right? And we start assigning names to those, like a triple bottom, for example. Right? So we see where we have one, I'm gonna just call these, I'm gonna call that the three, right? And price. where the market has come back and bounced off of. And this isn't exactly, it's not pinpoint, right? It was this 199, and this line I put is at 198.25, 75 cents, right? But for all intents and purposes, all right, this is a very clear triple bottom minus this little 25 cent, 75 cent off. And so you take that and you say, okay, I'm seeing the pattern here. I'm seeing what's happening. When it comes to 200, people are buying. They sell it when it gets up here. They buy it when it gets back down here. They sell it when it gets up here. They buy it when it's back down here. Right. So if I'm noticing that, then I can take that pattern into account and I can look for an entry point. I can say, hey, it's right here at 206. Okay, so we rejected this double top, right? Which is what people are now selling at. We rejected that level. People sold there again. Now we're watching it come down. Well, where's it going to head? I don't know. It might head to the same spot it did last time when people bought it up. And if it comes back down there, I'm going to buy it up because that's where people are buying it up, right? And then we get to the point where we break out because obviously we're not going to just stay in a range, forever. The stock couldn't just move sideways indefinitely. I mean, it could, but it's not, right? So then we have the point where we do end up getting those breakouts or breakdowns, and we start to see, like we see here, where those previous levels that were resistance have now become support. Those previous levels where people were like, sell it, is where people are like, hey, let's buy more, man. We actually broke above this spot. We weren't getting through here before. Let's buy more. I see you with your question. What's up? Let me unmute you real quick. Go ahead, Miss Martin.
So with this play that you're showing, I noticed that it's a gap right there in August. Doesn't it have to come down to fill in the gap?
Ooh,
Oh, it
great
already
question.
filled it in.
Let
Never
me
mind. I
not.
see it. It already filled it in.
Yeah, but what is my website? I don't think it's GapDB. Give me a hit. Load. All right. Let's talk about that. I'm glad you asked that question. I only let you unmute because we got the same last name. You probably related to me. Cousin. Oh, so I'm going to show you guys this site real quick. We're going to get back to the chart, but this still pertains to technical analysis. So I want to touch on a very common misconception, and that's that the kind of idea that all gaps get filled, and that's not true. It's kind of like the VIX and SPY being inverse. The VIX and SPY do move inversely the majority of the time, but they don't move inversely all the time. There are days where we've had a down SPY and a down VIX. There are days where we've had a down. I just said that. There are days where we have stuff like that. That's not. Oh, sorry, it's up. The SPY is up. The VIX is up. Right. Those things happen. So yeah, everybody says gaps always get filled. It must be true, right? No. All right. So if we look at real quick, and this website is another website to jot down. I'll put it in your group. GapDB. If you want to, if you like trading gap fills, or you want to look for potential targets on gap fills, this is another site where it will just show you gap fills for certain companies. But if we come back to the chart, now let's go to Apple. So Apple is a company that we all, for the most part, are like, yeah, Apple's solid. They gonna do what they gonna do. All right, they're gonna be Apple. Apple's the best. Yada yada yada. All right, just to entertain a thought. We all see this gap right here at $96. Okay, you see that gap? I'm just gonna mark that off. Make it red. Let's see. Oh, you know what? Here's another gap at $61. We're gonna mark that off. Oh, you know what? Here's another gap. And I know this seems like kind of like, what you doing, bro? Here's another one. Here's another gap. Nice, pretty little gap at $39. Right. So to say, and this is my problem with that statement, it's kind of the thing. To say that Apple, say that all gaps fill. Apple is currently at $177. So we were just gonna use this tool and drop down. All right, Apple would need to drop almost 80% to fill that gap. Right. And if we zoom back some more, I'm sure we can find more gaps that are not filled. Okay. So in all seriousness, all gaps don't fill. I saw somebody say that the other day on Instagram, actually, that all gaps fill. No. No. And you know what? If y'all think that Apple is gonna drop all the way down to $40, put a 2 in the chat. All right. I don't see that happening. And if Apple drops 80%, I think our economy is gonna be very, very bad. But it's possible, but it's very unlikely. I don't see no tools. I just see LOL. Exactly. All right. So just keep that in mind that we can use gaps as levels to look for, areas to watch, stuff to move to, but all gaps are not going to fill. Again, this is just one stock that I pulled up, and it would need to drop 80% to fill one of the gaps that we found within like 30 seconds. Odds of Apple going to $40, very unlikely. But hey, who knows? Right? But great question. Great question. So again, when we're looking at the chart, that's what we're doing. That's what we're gauging. Right? We're trying to gauge what can happen next. We're trying to base it off of what's happened before. And every stock is kind of different. We're going to touch on that with the indicators too, where like stocks, like when we were looking at the meme stocks, like GameStop, you can do technical analysis on whatever you want to, but when you have a company that's moving without logic or reason, like GameStop did, then it's a lot harder to do your TA. But you see here, double top. You see here, double top. You see here, double top, right? So it still holds true. It's just gonna be a little, sometimes you're like, it's supposed to be coming down right now, but it's not. But you're trying to get the story. You want to get the story out of the stock. You want to be able to see this, say, okay, all right, so what happened here? Okay, we came through, we broke down, had a big push up for whatever the reason was, came back to this area that we rejected off of previously, had some consolidation, big candles, but then ended up making another leg back down and came right back to where we previously bounced at. That's a buy opportunity, right? And so simply put, if you're looking at your technical analysis, it doesn't have to be complicated. It doesn't have to extend into every single individual candle. It doesn't have to extend into every single time frame. It doesn't have to be, let me look at the monthly, let me look at the weekly, let me look at the daily, let me look at the 4 hour, let me look at the 1 hour, let me look at the 15 minute, let me mark levels on every single chart to where my chart is just got a bunch of lines everywhere. It doesn't have to be like that. In some instances, especially depending on like the actual time horizon that you're planning on being in the trade, it can do you wonders to just assess the trend. Right. And so if you're looking at swing trading something, then it can work for you. I'm gonna pull up a different chart. Let's go PFE. It can do you wonders to assess the trend. Say, okay, we're in a downtrend. I'm gonna look for a bearish entry. We've been downtrending. I mean, this looks like it's been downtrending the whole year. Right. And so when you're assessing the trend, you can still find different stuff, and I have my charts marked up like crazy because I teach so often. But if you're swinging, your main point is then to just ride the trend. Let me find an entry point to ride the trend. We're in a downtrend. Here's a triple top. That's my put entry. Money. We're in a downtrend. We got a double top. Put entry. Money. Right. And those are setups that we just looked at. That I didn't go look at the weekly. I didn't go look at the monthly. I didn't do none of that. It's just, okay, what's the trend? All right. And we had a pullback. So if I wanted to keep it kind of core, and this was something that helped me when I was doing a full-time internship in summer school, full-time internship, full-time summer school, and trying to set a Guinness World Record when I ended up almost tearing my rotator cuff. Whole different story. But I was swing trading and very profitable. I doubled my account 3 months in a row. I maintained an 80% win rate. And it was mainly these core things where I would find the trend. I would wait for a pullback in the trend. And then I'm looking for candlestick patterns at those levels. So with this, it's what's our trend? Our trend is down. Okay, can I get a pullback to the upside? Let me get an upside move. Cool, we got it. All right, let me look for a bearish candlestick. Okay, I got an inverted head, not inverted head and shoulders. I have an inverse hammer right here. Cool. Once we take out that hammer's low, that inverse hammer's low, I'm entering. My stop loss is above here because now we have a bullish breakout. If we have a bullish breakout, there's no reason for me to maintain my bearish position. No reason, unless we reclaim the bearish move. Right. So that's always first and foremost. Somebody asked me the other day, like, what's your check down when you go on a chart? That's it. Whatever time frame, it doesn't matter. We could be on a 154 minute. Doesn't make a difference. I'm gonna switch to a different stock. But regardless of what time frame it is, it's the same thing. Where are we headed? What are we doing? All right, SPY, I see you with this crazy push up. No pullbacks. But now we're in this same area where we recently shot down from. We haven't made any new highs lately, than past month or so, or past couple weeks. And I forgot what time frame I was on, 154. All right. So now coming into this, and this works perfectly. So we're entering this zone where we have the rejections previously. We finished on the 154 minute with the bearish engulfing. All right. So this is something where I say, yo, this is a trade I'd be interested in taking. All right. Take out the bearish engulfing low. Show me that we're going to continue off that bearish engulfing, because having the candlestick itself isn't going to give me what I need. Right? You're going to have candlesticks everywhere. We're going to have bullish candlesticks everywhere, but a candlestick. And we need to look at what's continuing after. Right? After this hammer, are we still pushing up? Or is it we just hammered and then we kept going back down? All right. So it's more so of a confirming. And if you want the deeper confirmation, it's confirming that not only do we have the trend in our favor, not only do we have a pullback to give us a better risk to reward, because I can stop out right above here. That's a bullish breakout, new highs. But I can take this all the way back down just for us to retest the original low. We haven't made a new swing low, right? So I appreciate you, Mr. Walker, that drop in there. So when you're looking at that, those are the type of opportunities you want to look at. And again, that's not doing 15 different charts, but that is just simply looking at it, finding the opportunity in the trend, and seeing what's the previous story been when we've been here before, right? So we're gonna roll into some indicators, because I know that was one of the topics as well. Do y'all have certain indicators that y'all use? Y'all can put them in the chat if y'all have certain indicators that y'all use that y'all want me to look at. I know like the MACD, RSI, Bollinger Bands, moving average are usually the most common. All right, we got a MACD. I'll start with that. RSI, EMA ribbon. All right, let's get on that good old fashioned moving average convergence divergence. Okay. So with MACD, you have your MACD line, you have your signal line, which is usually going to be shown as blue and orange. You have your 0 point. Okay. So you can have the MACD lines cross. You can have them cross. That's what controls the color of your histogram. Once you have a green, you're gonna have a green histogram when the blue crosses over the orange, just like you have a red histogram when the orange is over the blue. And as the lines get closer together, your histogram will get lighter for that candle close. And if they got further apart, then it'll get darker, right? So when you're looking at the MACD, I want to actually preface it with this. Indicators come last, okay? Unless you're utilizing a indicator back-tested strategy, indicators come last. Trend comes first, support and resistance, supply demand, whatever type of levels you want to utilize. The candlesticks come next, and then your indicators. And like Ray said, the indicators are lagging, right? So let's also keep in mind that indicators take into account price action and volume, depending on the indicator. Right. Correct me if I'm wrong. I think that's all they take into account, unless it's like other type of indicators that are like a little fancier. But for the most part, that's all they utilize. Just like your EMA, the only inputs for an EMA calculation are price points, which you can see yourself, right? So remember, the indicator isn't your main kind of thing. Repeat the order. Got you. I'm gonna put it in the chat as well. Trend, support and resistance, candles. Those three, you're good. Those are your main, that's your main thing that you're dealing with, is those three. All right. After that, you can have indicators. You already kind of made your trading decision. And then you're like, okay, I'm gonna throw this indicator on there as well. Does the indicator coincide with what I'm looking at? All right. So like with this situation right now, we don't have a full MACD cross. We do see that the histogram got lighter, right? It's because we have this red candle as well. But right, so we see the MACD has potential to start curling, and that's where you can also drop down. I'm gonna add this too. You can drop down to another time frame. Let's go to a double-sided screen, and if we throw the MACD on this one as well, our MACD is curling right now on the 154 minute with regular trading hours. Let that pull up. But let's say we cut that in half and we went down from a 154 to let's go 70. What would that be, like 78, 77, 77? Somebody check my math. That math really don't matter. 77 times 2 is 154. Bingo. All right. Low chart. Sorry about that. My chart froze up. So we can start looking for is the MACD to start curling on or crossing on other time frames. All right. So instead of 77, let's drop down to a 38. All right. So now we have a MACD cross here on a 38. All right. So if we're looking at that, then now we can say, okay, cool, we're crossing over here. We also have new levels that we can look at for breaks. Right. So if we come back through here, we'll be breaking that support level, which should cause us to go start down into the gaps. And that could be utilized as a trigger. All right. With the MACD as well, your true quote unquote indication that you're moving into a bearish or bullish move is when the lines actually cross that midway point. Because you can have a crossover like here, right? If we're looking at our MACD on this one, I'll make it bigger. If we're looking at our MACD on this one, we see we crossed the 0 point back here with the down bearish MACD. And then we had a bullish histogram. Blue line is over the orange. We see our stock isn't making no change, right? And we're still under the 0 line. That's not a true bullish MACD signal. You need your MACD to be over the 0 line for it to continue. But just to reiterate again, you would have saw that you were in a downtrend, had a triple top, quadruple top. You broke through your support, made a lower low, and kept going down. You wouldn't need your MACD in the first place. But, right, so some things to keep in mind is utilizing 2 time frames with the MACD. All right, letting it cross over on a smaller time frame while you're looking at it curl on a larger time frame, and then using that smaller time frame to have a more pinpoint entry while you're letting it play out on a larger one, and making sure that you're letting it cross over that 0 mark, because until then, as far as the MACD is concerned, from a technical standpoint, And again, as far as I know, it's still not bearish. It's just showing you that there is a pullback happening. It's bearish once it crosses under that zero line, just like this wasn't bullish until it crossed here. And now that is a true MACD bullish buy signal. Hopefully that helps. I ain't talked about no MACDs in so long, and RSIs. When you live trade, is it worth it to use the indicators because they can fail? So again, as far as I am concerned, indicators, you can use indicators. Indicators is like icing on the cake. Like you can have a cake and it still be a solid cake without the icing, but you can't just have icing and no cake. You need to have substance. You need to have substance. So when you're using these indicators, you can use them. And I don't personally have indicators on my chart like I used to. And I rarely use them. I rarely use them now. But if it makes you money, then use it. If you have done, and I would recommend to do a period of time of testing. I'll always say that. All right. But if you test out your trading strategy involving the MACD, Bollinger Band, RSI, and you get your results for a month, 2 months, 3 months, a quarter, you want to have reasonable results, 100 trades or so, right? If you can do that, and then you do a month without the indicators, still same analysis, no indicators, and your results are worse, you got two options: either learn how to be better without them, or just use them and make more money. Because at the end of the day, you're trading to make money, and there's no bonus or no deduction for using indicators or not using indicators. It sounds cooler to say you don't use indicators. That's why I do it. Cause I'm like, oh, that sounds cool. Let me learn how to do that. But and it makes your chart cleaner. But if you only have one or two, it's not gonna clutter your chart as much. You just don't want your chart to end up looking like this. You don't want the chart to look like that. You can't even see your price number. You don't want that. Right. But I would again recommend testing. And then indicator-based strategies are valid. It's just a matter of doing the testing and understand that they're usually going to be deeper than buying when the RSI is oversold and selling when the RSI is overbought. For example, I got you, Daniel. For example, I have a watch list right here called my 25 RSI hourly watch list. All right, these are stocks that I did testing on and found that when their RSI on the hourly goes under 25, they usually pop back very quickly. How was the transition? But I got you, Daniel. Let me go ahead and do that for you. How was the transition? I'm gonna answer that question too. So Daniel asked, can I show my favorite indicators? I will say that these aren't indicators that I use regularly. These were something that at one point in time I just needed to have quick access to them. And so that's why they were there for me to be able to use quick access, or somebody had a question, I'd be like, oh, look at this real quick, so I can look at this with you because you're using this indicator. So those are the ones I have pulled up. And I do have my own indicator as well. All right, the transition from using indicators to using mostly candlesticks and price action. It was different because it's kind of like how you go through school, like you take a math class and you learn your multiplication tables, like to 12 in most cases by heart. Anybody in this group, if you say, what's 5 times 10, you're like 50, it's it. Right. But you get to a point where sometimes you can do the math in your head, but then you just go to the calculator. Like I did 154 divided by 2 in my head, and then I checked it on the calculator, right? Rather than just my immediate thing, go to the calculator. So I felt like a part of it was, I'm relying on this tool, and tools are good, but I'm relying on this tool to read the price action more than I am. And unless it's something that, again, is back tested to have the results, you want to use it as a helping tool, not a whole tool like that's going to do the whole thing. Right? It's not going to be your primary analysis. So when I switched to using mainly candlesticks and price action, I felt like it was kind of easy because this was again something I started leaving the indicators behind back in 2019. That's when I was doing my internship, and it worked. You know, it worked. Sometimes I will use the RSI and be like, all right, let me look at what's something like, is this overbought? Okay, so it's not overbought. But that's how I got to a point now where sometimes I could tell you what an RSI is without looking at it. It's like, okay, yeah, I could tell this is overbought. So it was smooth, bro. Just, practice and going through the reps. What did I do that really, what, yeah, okay. What did I do that really helped me learn price action and lead the indicators? Just learn to read them like a book. Like literally trying to create a story out of what's going on. What's happening? What are the bulls doing? What are the bears doing? Where are they trying to take it? Okay, what's happened again, like we were looking before, right? Here's another example. All right, we see the rejections here. All right. So what's the storyline? Okay, we got bullish engulfing here off the support. So not only is this a spot where that's why I used to look for that so much is I'll use a hammer. So if I'm looking at an uptrend, what's the story? The story is that overall we are moving bullish. We have our bearish movements, our bearish moments, but overall we're going up and we're continuing to go up. Okay, cool. Now let's drill in a little deeper. Let me find support and resistance levels, all of that. Mainly just support levels. Okay. What's the support level telling me? The support level is telling me that in this uptrend, this is a certain price point where we're most likely going to pop back up from. Okay, cool. All right. And then what happens after that? Okay, we got a hammer candle. What's the hammer candle telling me? Okay, the hammer candle is telling me that, initially the price opened up. The bears were in there like, yo, we here. Bearish, baby, sell, sell, sell. And the bulls came back. Tom Brady in the fourth, Kobe in the clutch. I was like, nah. Ooh, shot it up. We have a hammer candle now. All right. So those, I'm just putting the story together to say, okay, this is what's going on. Let me engage with this and get a part of the story. So we're using this level to bounce back up. Okay, cool. I'm gonna take that as my entry. All right. And just like not being very reliant. You don't have to rely on indicators. I still have like screeners and scanners from when I had an indicator-based strategy. I think I really left that alone right before I left college, which that was like 20. Let me not age myself. Never mind. But that was it. It was an effort to have a cleaner looking chart and be able to like not be tied down and feel handicapped by what was going on, especially because indicators are lagging. They can only put out what price has given us or what volume has given us. And then a lot of times you'll have indicators that, it'll be, let's go to Chewy. Let's put Chewy on a daily. All right. So if we look at our RSI on Chewy, all right, we'll have a lot of times where, okay, Chewy went oversold here. The typical train of thought is once it's oversold, you should be buying it, right? Chewy went oversold right there. After which, let me get this out of here. After it went oversold here and you would have bought it, it proceeded to drop another 46%. 46%, that's almost half, right? If you put in $20,000 in a matter of 80 days, you would have lost $10,000 or close to it, right? About 8,000. But, so that's where I was like, okay, you know what? You can't rely on indicators because a lot of times like these things aren't going to be the hard like reasoning behind something. Let's get a bigger scope of the picture and take a move on there. So what up, Alex? Popping in, trying to be all slick, pop in here. See what's going on. See what we doing. All right. So the other thing with the RSI, because Moody brought it up, one of the things that I did with the RSI when I was more into indicators was I would play around with the length on the RSI. So this is like the period setting, just like with EMAs. With EMAs, you have a 20, a 50, a 100, yada, yada, yada. The RSI, we can change this to get a different view of things. So if we look at a 2-period RSI, which was one of the things I did a lot more often, I'm gonna look at SPY. All right, now it's calculating overbought and oversold based off of 2 candlesticks instead of 14 candlesticks. All right. And so I would use that and I would play with my overbought and oversold levels as well, where I was taking the more so extremes. And that's something I also did with the Bollinger Band. With my Bollinger Bands, I didn't use a 2 standard deviation 20 moving average Bollinger Band. I would take my Bollinger Band, leave the 20-day moving average, and I would use 2.5 or 3 standard deviation. I'm going to show you all that in a second so you can see why. But I would take that and I would change my RSI upper to 90 or 95 and change my lower to 10. All right. And so then I'll be looking for short-term swing opportunities when my RSI, the RSI 2, and there was other stuff. Like it had to be in the uptrend. I had like a whole list because I ran over 500 tests, tweaking different things. But no, so here we have more of an uptrend. Here we have a period where our RSI drops below 10, right? On the 2-period RSI. Cool. So I can enter my calls on this day. All right. Enter calls here. All right. Wait for it to go back up to 90. All right. Here we had 85. I would think that during this live candle, we might have pushed 90 before we had to pull it back down. All right. But just a quick little move there. All right. We're below 10 again right here. Enter calls. Also got a double bottom, but enter calls. Let us get to 90. Boom. All right. Out. So that was another way where with the indicators, and that's because my nature and my love for this stuff, I got very in the weeds, very granular, very, what if I tweak this? What if I tweak that? What if I test this? What if I do that? Boop, 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 boop. What about a 15-period RSI? Why is it 14? Who said it had to be 14? What if we do 15? What if we do 25? What if we expand it out? Right? Just like this again, like this watch list. What if I change, those settings and look on a different time frame? Certain stocks have better reactions with the RSI than others. All right, we see Chewy. Chewy don't give a damn. It's dropping. It's dropping. It'll just keep dropping. They don't care. Right? And you would have got burnt with the idea of just getting in because it was oversold. Right. So I'm gonna show that Bollinger Band as well. And I'm gonna show y'all why I would tweak my Bollinger Band. So here's your standard Bollinger Band. I'm gonna leave it with its regular settings. I'm gonna switch over to an actual individual equity. We can do Snapchat. All right. So here we have Snapchat with a regular Bollinger Band. And now I'm going to put on no, that's not what I meant to click. I'm gonna put on a Bollinger Band. I'm gonna change the colors. And if y'all have questions about anything, please drop them in the chat. I think we're pushing towards our time. We not, but I just didn't take the breaks. It was supposed to be 30-minute sessions, and I just we going over all this right now. We had one break though. I'm gonna take these colors to make them white so they can show up very clearly. But yeah, any questions, please put them in chat. It don't matter what it's related to. It could be how my day is doing. My day is going well because I'm teaching y'all. All right. So we change that to white, put it on a 2.5. Can I put this on YouTube? Maybe. So looking at this, all right, we can see how using the white, I'm gonna double up one more time. I'm going to put a third one on. Put a third one on, and I'm gonna put it on 3. And we got purple. All right, cool. All right. So using that, and if you don't understand the Bollinger Band or the Bollinger Band concept, and how it works, I'll explain it briefly. So the Bollinger Bands created were to give you a perceived range of where price should be. I think it is 95% of the time. If not, it's 90. And that's within 2 standard deviations of a 20 period moving average. All right. So standard deviations kind of goes into statistics. But what standard deviations basically are used for or is to say on a range of possibilities, you have like your main kind of spot, right? And then you have your outliers. You have your stuff that's a certain number of standard deviations away from what is expected, right? So if we have like 50 in the middle of 101, if we did a bunch of tests, assuming that 50 was kind of like the base average number, then as we started moving away from 50, you had some results that were like 97, some results that were like 4, right? Those are standard deviations away. And you measure that length, 1 standard deviation, 2 standard deviation. To show that a little bit more, I'm actually going to change this one to being a 1.5. All right, and so you'll see that get a little tighter, right? That purple one is now tighter, right? And so I've actually done stuff before with like 0.8 Bollinger Bands, but the point is the Bollinger Band should create a range 8. We see that price comes out of it a lot and is outside of it a whole lot. Right? It'll be outside of it here, outside of it here, outside of it here, outside of it here. Right? We have our standard 2, where price comes out of sometimes, but for the most part, it's contained. For the most part. And if we switch to our 2.5, I think I froze a little bit. There we go. All right. If we switch to our 2.5, and where we saw before that there were multiple examples of price leaving those bands, we see prices. We have this one candle right here. So it's earnings candle, and it's earnings candle here, and it's earnings candle here. Price is contained within these bands. Okay. And so when utilizing the Bollinger Bands, a lot of different ways you can do it, a lot of different strategies. All right. But looking at the same scope. So we already know price should be contained within these 2.5 bands. I would say more like around the 97% amount of the time. All right. Factor that in with, you can always do your trend, you can do your candlesticks as well. All right. I see one right here. We have an inverted hammer. So we have an inverted hammer. We have price hitting this 2.5 standard deviation band that we know price should not be outside of. Right. Gives us that nice rejection of that move back down. So you have just those types of opportunities when you're using the Bollinger Bands. And again, play with the settings to be able to find those outlier type of deals. So this is a strategy I use a lot more when trading crypto, because crypto will have big crazy spikes. And so when I'm looking at this, just like we're on Snapchat right now, when we start hitting these peaks, here's another one. All right, we have a gravestone doji right here. So when we have a big gravestone doji, you see what happened afterwards. All right, so combine your candlesticks with your indicators and find a way to make it unique to you. All right. We talk about, or people talk about, like the market makers and the market set up for us to lose and blah, 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 blah. All right. So if there's like these common strategies or something that's like, not price based, like using this indicator here, for example, they know that you're looking for an RSI to be oversold before you buy it. They know that. All right. We just looked at Chewy that just kept running. Right. There are, I would say this is like 2 or 3 leading indicators. But with that, it comes more volatility and it being wrong. But yes, a Bollinger Band can't print until you have price. Right. Is a Bollinger Bands best on daily or higher time frames is stronger? So I wouldn't say that it's necessarily a time frame thing as much because it's a math thing, right? Regardless of the time frame, the Bollinger Band serves to say, I don't know why this guy's the heck. All right. The Bollinger Band serves as a simple, mathematically speaking, price will be contained between these points a certain percentage of the time, and that depends on your standard deviation. Right. Like I said, I think the original setting of a two standard deviation is like a 90 or 95. I don't recall. But that's why I bumped mine up. But you see on the weekly, we'll look at a couple of them. You see it came, tapped it, rejected, tapped it, rejected, tapped it, rejected. Let's look at AT&T. Why not? Tapped it twice, popped back up a little bit. Didn't touch it. It's kind of like it wants to touch it now. Oh, here we go again where it came down, hit it twice, and popped back up. This one it didn't. So you still have to structure like right here. We can't assume that just because it touches it means it's gonna pop back up. Right? Just like right here, we can't assume that just because it touched the top means it's gonna drop back down immediately. And that's why I was saying still incorporate your candlesticks as well. But we can create a strategy where we say, all right, so what we'll do is we'll let the candle break through that level. And once we're about to get a close, then we'll take advantage of that rejection of that level. So for instance, that looks like, let's go to a whole different stock now. Let's go to Coca-Cola. So for Coca-Cola, if we hit the upper Bollinger Band, what we're doing is we're going to take puts once we get a break of that candle that rejected that. So we need to break the low of the candle that hit that upper Bollinger Band. And we're going to target a move back down to the 20-day moving average, for example. Right? Same thing for the other side. Lower Bollinger Band, we're going to take calls. But we're going to take calls once we break above the high of the last candle to hit the lower band. And then we're going to ride it up to the 20-day moving average. And we'll stop out if we push back in the opposite direction of the original band testing candle. Does that make sense? I kind of appreciate you, bro. Creating strategy off the top of the head. Yeah, I see you said repeat. I'm like, yeah, because I did just like sit here and create a strategy. Oh, for y'all. So again, what we're looking at, again, the concept, right? Conceptually, we're expecting that the price will be contained within these bands. So to take advantage of that, we're going to take puts when we're at the top of the band, and calls, we're going to look for calls at the bottom of the band. But we know that just because it touches the top or touches the bottom does not mean immediate reversal. So to protect ourselves from that and to give us a further confirmation of reversal, once it hits the band, we're going to wait for it to break the high or the low for puts, the high for calls of that candle that last touched that band. And I'm going to show you examples because we're looking at them. And then our stop loss will be below the candle that touched the band, our trigger candle. And then our profit target will be the moving average, which would be in the middle. Are we including the wick? Yeah. Yep. All right. So let's look at two examples that are right here in front of us. So right here, we had, and we start digging into like, okay, well, how do you choose a contract? How long is our expiration? Yada, yada, yada. Right. But price wise, all right. So right here, we had this candle come and touch the band. All right. Cool. This candle touched the band. We're on the weekly chart. Is the Bollinger Band similar to the Don Chain channel? Yes. They have different calculations created by different people, but they are similar, just like the Keltner channels as well. Similar concepts, but different people, different mathematics. So Bollinger Band tapped it here. All right, we're waiting for a break of this level. So as of right now, this is how our trade would be set up if we saw this tap. let the candle close. Okay, cool. This is our entry. Our stop loss is here. We're looking to come down to that moving average level off of that candle, which would mean we're targeting right here. So that would be how our setup is looking. But we did not break that low on our next weekly candle. We broke it on the one after that. So we did not break it. So no entry on this candle. All right. Now price opened up back here on a gap and then shot back down. Okay, cool. Whatever. All right. So now this candle breaks through this low. So that's when we take our entry and we're targeting that 20-day moving average level, which is here. 1 week goes by, second week comes, bearish engulfing. That also hits our target. Cool. We won the trade. All right. Time goes on. Bam. Our alert goes off because you can set alerts on indicators. Right. For those who don't know, you just go to alert, condition, Bollinger Band, crossing the upper Bollinger Band. We need our price. So our price is crossing the upper Bollinger Band. All right. Cool. So that's how you would set an alert for a Bollinger Band. Or for any indicator, you could set an alert. All right, cool. It hit the lower band. We're like, oh, it's going to pop up, right? Gotcha. Next week, did not go up. You're down if you got in. But we're waiting for our trigger. All right, so our entry would have been on a break above this high. We're targeting to move back up here. And then this came down. All right, so no entry still. Waiting for it to break this high now. This next week came. Still has not triggered. No entry. Still hitting the lower Bollinger Band, waiting on the reversal. Bam. All right. So now we get this candle come in. Cool. This candle takes out the high of our candle that hit the lower Bollinger Band. Cool. We'll take that as our entry. Our stop loss is going to be below that candle that hit the band. And we're targeting that move up to the moving average. Next week, Coca-Cola goes up 8%. They also had earnings. Goes up 8%. Make our money. Cool beans. All right. And wait on the next opportunity. And so as you're creating strategies, like, man, right here, like this is a whole nother one you would have took. You would have entered it right here. You would have been up in profits. If I had taught this class 3 weeks ago, y'all would be in profit right now. Just saying. But yeah, you're welcome. Appreciate y'all. So that's something. And then of course, while you're building your strategies, you have to start looking at the different nuances. Like we said, right? This was our earnings week. It fit the strategy, but look at it and then look historically. Like we have all the price data here. We can go look at for a year. We could sit here and take 30 minutes and be like, okay, would this strategy work? Let's see. Is Jordan really like, is he spewing BS or is this nigga legit? Sorry. Is this guy legit? Cool. Upper Bollinger Band. What happened? We broke the low. That's our entry. Our stop loss is going to be above this high. We stopped out. And then it ended up coming down, hitting target. All right, we took a loss. Whoop. Upper Bollinger Band. Nope. Take out the low. Stop loss up here. Did not hit the stop loss. Come down. Target. Cool. Boop. Over here. Took out the high. Profit. All right. Okay, cool. This thing works. All right. Y'all would have made money. Any whoosies. All right. So earnings. That's something to think about. And that's something you can look at. We're looking at the strategy on the chart. This is something that we can look at and go back 5 years to say whether or not this strategy would, at least on the chart, have been a profitable strategy. You factor in options pricing, that stuff to take into account as well. It's easier to feel that it can work once you see the chart actually work out. Then we can get into the pricing afterwards. The setting on the Bollinger Band is a 2.5 standard deviation rather than a regular 2. This is a 2.5. So with that being said, then you start looking at that, and that's any strategy you're creating, right? Around earnings, does earnings affect this? Or is it something I can use along with earnings? Yay or nay? Something to jot down. Should I trail my stop? When it's something like this, maybe not. Maybe you shouldn't trail the stop. Maybe you should just let it be, and let it might pull back some and then continue and blast off. Right? Should I take all my profit as soon as it hits that level? Or is there something that can happen when it hits that 20-day moving average that signals me to stay in and let it keep going? Right? Maybe we're going to keep going up. What triggers a re-entry, right? We had an inside candle here. We broke outside the inside candle, continued to press up to test this resistance. I feel like I said that very fast. We hit our target. We had an inside candle, right? So we had consolidation. And then we had our breakout of the consolidation. And we continued to push up towards our previous resistance. Is that grounds for re-entry? Do we still look at this trade, or are we done? Or do we just trim? We hit our target, we trim, we set a percentage based stop loss that's in profit. Hey, I just took profit on the bulk of my position at 70%. The rest of my position, I'm gonna forget about it. I'm gonna go live life, go find a new trade, whatever. The rest of my position, I've put a stop loss in for 50, 25. Cool. Like that's one of the things that I do when I'm managing my positions now. If you want to run, baby, go. Go. I'm riding the train. I'm riding the wave with you. You trying to go to the I'm with you. If you want to switch up, that's fine. I ain't gonna take a loss. Shouldn't lose money if I already made money. Right? So yeah, that's the Bollinger Band. Again, any questions, put them in the chat. Put them in the chat, put them in the chat, put them in the chat, put them in the chat. Put them in the chat, put them in the chat. What's my email so you can send me a Uber Eats gift card? You shouldn't have. Nobody did, actually. I made that up. There was somebody who used to do that. So sometimes they'd be like, hey, bro, lunch on me. Like, oh. No, it's not time frame dependent because it's just math. It's just math and statistics. It's just math. Yeah, boy, yes. Yup. Mizzle. Absolutely. All right, here's another one on the video. The video. Hit the upper band. Did you break a low? No, no entry. Hit the upper band. Did you break a low? No entry. Hit the band. Did you break a low? No, you didn't. No entry. Hit the band. Did you break the low? No, no entry. Hit the band. Did you break a low? No, no entry. Right. And this is again why you need to not just take indicators at face value and play them like everybody else's, and why people lose money through that method. You would have lost so much bread if you just held it. The contracts you got would be at zero by this week. You just been getting beat up and beaten up and eaten up, whatever. I don't know. All right. Okay. But what did Jordan tell us on that Zoom? He said, wait for it to break the low. Break the low. Stop loss is here. Target is down here. Profit. You're welcome. 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 I accept tips. But if you got like life advice, I prefer that over monetary tips. I like tips. All right. Can I go over some candlesticks? What helps me stay disciplined? Why is it important to have multiple tools or strategies? Jordan, will it be possible to see Nike on the band? Yeah. Look at you. You're so helpful, bro. You asking all the questions they thinking about, but they don't know they're thinking about. You're so helpful. I need water. So here's Nike on the band. I just want to do this one more time just to like prove the point that you can create your own strategies and you just have to, let them work. Right here would have been a loss. Broke the band, broke the band, broke the band, broke the high here. This is your entry now. But then it would have came back and hit your stop loss. You would have lost that trade. All right. This trade you would have won. All right. That trade you would have won. This trade you would have won. All right. So just again, like have some confidence, y'all. Y'all can sit here and make your own strategy. It's the weekend. Make you a strategy, man. This one would have lost. Make you a strategy this weekend. This one would have won. Make you a strategy. All right, anyway. So here's Nike. We are on the weekly. We can go down to the daily. Same type of concepts. But I would say, test whatever it is on that time frame. Stop loss above or below the candle that touched the band. Yes, ma'am. Again, this is something that just popped out my head 20 minutes ago, so it's not fully tested. Don't go post me somewhere and be like, Jordan's strategy. This is Jordan Martin's strategy that he said he's been using for 10 years. Not the case. Yeah, definitely, right? So that's exactly what I encourage. Run a paper trade it. Try it out. My boy, he finna try it out Monday. So What helps me stay disciplined? And then candlesticks and important tools and strategies. So I'm gonna start with the ones that are verbal answers. What helps me stay disciplined? Oh, geez, if you don't make bread, you don't eat. I was uh I was talking to my friends the other day. They said something. They said something. I told them I was finna like, I don't know, I told them I was finna do some work on something or whatever. Um, and they said something like you putting a lot of time into that. I was finna go watch, like I still study, I still am learning. I'm always learning. I'm still studying and learning trading things, you know what I'm saying? Even if it's just like refresher stuff, like, oh snap, I forgot about that, or I haven't thought about that lately, or I haven't reviewed that lately. Um, and they said something like, why are you doing whatever? And I was like, bruh, I don't have a paycheck just automatically coming to me every 2 weeks. I mean, like, I'm good. But like, you know what I'm saying? Like, I still have to, I'm not working a job, but I still have to make sure I am paid. And so discipline and being undisciplined would lead to me not having money. So I got to be disciplined. I don't have a choice. I don't have a choice. I don't have a choice. I'm not going back and getting the job. So I don't have a choice. It's like a force thing. It forces you to be disciplined. Just like trading in a group, and calling out trades, it forces you to be thorough in your analysis because you have a reputation and a brand and all of that. Um, so I care about how I look to people, to a certain degree. People are gonna think what they think for how they feel, regardless. You can't please everybody. But I don't want to have attached to my name, hey, this dude sucks. And so if I don't want to be this dude sucks, then I want to be like, okay, before I put this trade out, let me look at this. Before I take this trade with my own money, but it's a deeper level. Like, is it something I would want people to see? Is it something that I want people to participate in? Yeah, or not, you know? Um, as far as what was the other question? Important to have multiple tools or strategies. Um, there's different market conditions, different economic conditions. Uh, the way that things go is always changing. You have your bull markets, you have your bear markets, you have consolidating markets, you have like market events, where it's increased volatility. You have times where you need to be more defensive and take off risk. You need to have times where you are willing to take on more risk. And so when those situations arrive, you don't want to be in a position where, yo, ooh, like how so many people, when we had that last bull run, like so many people just made money because you could just buy calls on whatever you wanted to and make money. Or like that COVID recovery. That's not even the bull one I was talking about, but like the COVID recovery, buy calls on whatever and you'll make money, generally speaking. When the COVID drop happened, buy puts on whatever and you'll make money, generally speaking. Right. Um, and so when that's done, do you have strategies and tools that will help you in more normal market conditions? When it's not as simple as just buy it, like just buy whatever you want to buy. Everything's going up, just buy whatever, right? So having that, being able to analyze and see where stuff is going, like we were saying earlier, with like identifying, okay, the market's gonna drop here, right? Doing the analysis, seeing that, okay, cool. I'm looking at the market. This is gonna be our top. We're not going no higher than this. This August open is our August high. This is a wrap. Um, and then taking that and being able to trade, knowing that we're about to drop and have decline. It's important to just be diverse. Just like when you hooping. It's so easy to guard one-dimensional hoopers because all bro do is pull up. He can't dribble. He can't drive. So I'm just gonna face guard you. I'm just gonna be in your face the whole time, and you are essentially removed from the equation. He can only dribble with his right hand. He can only drive right. So I'm gonna cut off your right and force you left. Easy to guard. You just made my day simple, bro. Appreciate you. right? We don't want to be like that with the market where we can only trade, in one market condition. Because when the market's like, oh, you can only trade like this, that's not how it goes, right? But that situation where, I've been there where I couldn't dribble with both hands and couldn't lay the ball up. You can't do nothing. So you have to develop more tools and more abilities to be able to trade certain stuff, um, and be flexible in the markets, right? And then candles, I think candles might just be a whole nother class in itself, bro. I need water. Because it's so many. So many. But that's a good question. I appreciate that. We did touch on some. We touched on we looked at some gravestone dojis, some hammers, some bullish and bearish engulfings, inside inside candles as well, or haramis, if we're going to be more technical. Um yeah. Oh yeah. So how we looking, y'all? We've been going for about 2.5 hours now. I just need some water. And I played basketball for 4 hours earlier. So I need to eat. But is this helpful? Are y'all getting stuff? Are y'all gaining? Do y'all have questions? It's like 40 of y'all on here. I would hope that somebody has, besides people who I know the answer to the questions they're asking. Um, I hope now taking down notes so helpful. Your mind is full. That's the other thing I was thinking about. Is like, at a certain point, it's like, all right, I need to stop eating and go digest, and then we come eat later. Oh, yeah, okay, good. I'm glad y'all are gaining from it. I'm glad. I did record both both of the little sessions, or both like hour-long parts. So I'll go ahead and upload those, and I'll share them with y'all. I'll talk to Alex about that. When can we get part two? Where can we find you? Oh man. Oh yeah, y'all just hit me up, man. Like I said, we're guests. This was an impromptu thing. This isn't really about finding me. Some of y'all already know me on Instagram, Martin Investment Group. Um, but this was something I was again doing for like a friend who needed somebody to step in for them today. So that's what I did. A lot of y'all follow me on Instagram already. If y'all don't, I will. I know, bro. I appreciate you though. I'm gonna drop my Instagram in the chat, because I know that's something that they have shared before. Um, my investments, Martin Investment Group, however you spell it. So yeah, Martin Investment Group. That's my Instagram. For sure, Corey. Thank you. Have I ever thought about molding a few students to become a mentees? Yeah, yeah, bro. I do one-on-one mentorships and coaching. I don't like do it with everybody. It's certain people who I've had to have seen for a minute, and then I'm like, okay, I'm comfortable in investing my time into building you up further. So, oh yeah, oh yeah, y'all definitely watch out for the fake pages. So if you are interested in coaching, like I said, just send me a DM. If you want anything, send me a DM. I try to do my best not to utilize others' platforms to like promote myself, uh, unless that's something that was previously discussed. All right, so I'm gonna share my link to my Instagram in the chat. Like I said, if you need anything, have any further questions, DM me. I'm in y'all Discord as well, right? Alex has added me into the Discord. I'm a resource to y'all. There's my Instagram link right in the meeting chat. So I'll leave the Zoom open for like another 5 minutes. If y'all have any